10 o'clock Eastern Time here in New York City. We're just getting the latest numbers on consumer confidence.
Coming in at 93.2, which beat the estimate. Don't forget, we hit a near three-year low at the end of August, and people saying, aha, finally all this uncertainty over trade and is having an effect on the consumer. Since that number, we've had a nice little modest rebound, if you like, so better than expected on the consumer sentiment numbers. And again, historically, still pretty high.
And another indicator we got at 8:30 this morning was durable goods orders. That's heavy-duty, big-ticket items. Orders were up unexpectedly. So a couple of pieces there of economic news which are probably good for the economy, good indicator. Joel Shulman joins us now. Joel, I know that you're more inclined to go with entrepreneurial companies.
You're right.
But give me the big picture here.
On the 93?
Well, there were two pretty good indicators there.
Yes.
The economy moving back up a bit.
And it's consistent with what we've seen, throughout the year. I mean, the markets are very strong in terms of interest rates, in terms of market demand. The consumer discretionary is very strong in the U.S. And so this number is right in there, 92, 93. It's been as high as 98, 99. But I think that's not the big drivers. I mean, as we know, there's a few big drivers, a few big catalysts. And this is just, I think, kind of modest news.
The big driver to you is consumer spending, isn't it?
Well, consumer spending is really big. And certainly, the market's driven by China throughout the year and interest rates. And, lately it's been, dominated by news on these IPOs. And so that's really what's driving the market. The market's kind of sensitive to various things.
But at this moment, there's no reason to get out there and start selling and selling and selling.
Not based on that news, no.
All right, Joel, thank you very much. A look at the big board, because it's not quite such a clean-cut gain. Yes, the Dow is up 25 points, but we also have a downside move for the S&P and a downside move for the Nasdaq, okay? So a little bit of backwards and forwards here. We don't have quite such a clear-cut gain as we had at the opening bell. Now, you better take a look at Micron. That is a chip maker, of course. It's down big time today. I think that looks like a 9% drop. Yeah. They gave a not-so-rosy forecast. They're concerned about uncertainty over trade. Their revenue in the last year down 42%. The stock's down, there you have it, 9% as we speak. Now, we've got real trouble on the IPO front. Peloton dropped in its debut day. WeWork doesn't look like we're going to get that IPO this year or maybe even next year. And Endeavor, that's another company, that's a kind of a talent agency, sort of. That's a company which has now delayed its IPO twice. Back to Joel Shulman. You invest in entrepreneurial companies. So this is a really pretty bad IPO climate and a pretty bad entrepreneurial climate.
Well, yes and no. I mean, so you're absolutely right. We do invest in publicly traded entrepreneurial companies. And when you look at these companies like Uber and Lyft and WeWork and Peloton and Endeavor, I mean, these are entrepreneurial companies, but, then again, so is Pinterest and so is Beyond Meat. So there are a lot of entrepreneurial companies. Almost by definition, they come out IPOs. I mean, many of the IPOs are entrepreneurial companies. Now, what we look at, we have overlays to our models. First, we don't get into IPOs for a variety of reasons. We like them to be seasoned. Now, secondarily, we like to look at entrepreneurial companies that exhibit good behavior. Now, the last few weeks, we've seen a lot of examples of companies where there's been, behavior, particularly in WeWork, that may have appeared to be self-dealing. And when you look at situations when you've got an entrepreneur who also has control, right? They have high ownership, they have high control, they've got a very tight team. We need to look to make sure, is this entrepreneur good? When the entrepreneur is good, there is nothing better for the shareholder than that. Jeff Bezos is, exhibit A. Bill Gates, exhibit B. I mean, when you look at Sam Walton. So these are good entrepreneurs. They lead the organization. They've got integrity. But we're seeing now in the last few months a rush to IPO, a rush to M&A. Interest rates are low, and there are a lot of people who think, the game's about to end. Now, we're seeing in the case of Peloton, one of the things I think is interesting that was not discussed. I mean, they went from $427 million to over $900 million in revenue. So everybody knows big revenue growth. Everybody knows a lot of new subscribers. But what's interesting is they're doing 100% financing of their machines. These are $2,000, $3,000 machines. And it's 100% finance, no bad debts, no accounts receivable. No bad debts, no accounts receivable. They're booking the revenues immediately. And it harkens back And I hate to do this in some respects because, you know, there's already enough analogies to the dot-com bubble, but it harkens back to the days of Lucent Technologies. I mean, in 2000, Lucent was booking revenues before they recognized them. They were recognizing before they realized them. And what happened was the SEC fined them. Lucent, for some who may not remember, was the research and development arm of AT&T. And they were a $200 billion company, fourth biggest company on the New York Stock Exchange, and they plummeted to nothing. So I'm worried about this type of behavior where they're booking revenues and with no bad debts, no receivable, and we don't know who the financing arm is.
Okay, Joe, I've got to break in for a second because I've got this.